What is going on, everybody? It is the Naughty Investor here, and I am here with a special guest on the channel. Would you like to introduce yourself?
Hey guys, this is Andre from the 1 Minute Economics YouTube channel, and yeah, I'm kind of here. This is as a bit of a secret. This is the 8th collaboration I'm shooting today.
What do you think the problem is with, or if there is a problem with the current economy, is there overvaluation? Is there bubbles forming? What do you think on the current situation?
Now, first and foremost, what I tell people as someone who even trades crypto on leverage, I'm not exactly the type of person who's easily spooked by, let's say, a 60% crash in the stock market. So right off the bat, I try to make it clear that I'm not afraid of a stock market crash or a real estate crash. Those are cyclical in nature. It's just a business cycle, nothing special about them. What I'm afraid is what happens next, because essentially the problem has been this. If we take not one step, but 2 steps back and look at the dot-com bubble, what I'm afraid of is a major change in narrative, because the narrative so far has been, yeah, you had the dot-com bubble, that crashed, people were panicking, but don't worry, central banks and governments have it all under control. And indeed, they quote-unquote saved the day. They lowered interest rates, the economy was jump-started, but this came at a cost, and that cost was the inflation of an even bigger bubble, the real estate one. What I am afraid of is that, of course, we're going to have another panic. We're going to have another crash. People are going to be afraid, and the same narrative is going to be pushed, because if you're the head of a government and a central bank, the last thing you want in this world is to be that guy, the guy under whom it all comes crashing down. So they have every incentive in the world to want to kick the can down the road for another business cycle.
All right, so really great. I agree with a lot of what you said. So just kind of give the viewer kind of the gist of it. You're like not even usually a doom and gloomer. You're kind of more of a moderate, like I would consider myself, on the Austrian side of things when it comes to economics. I'm not really a Keynesian. And a lot of Austrians are more prone to like, doom and gloom type thing, but you're just like more of a centrist in that respect. And you're really worried about this, and you laid out the facts right there. Another year will be a record for longest economic expansion. We potentially have trade implications, which could, just multiply already existing problems. We have, almost non-existent interest rates. We've had quantitative easing. We've had all these different things, not even getting into like debt and stuff. So there are a lot of different things going on, that are just not good for, your everyday person. So how does your everyday person protect themselves? Because, it's easy to just talk about it. What should they do? Where should they put their money? I'm more so at this point putting more money into like international stuff, countries with low PE ratios, things that I think are emerging markets. I'm not really putting a lot into the US right now, not because I'm a doom and gloomer, but I think, with all the things you laid out, we're due for a big correction, and it just wouldn't make sense to put a lot in right now when you could wait for the big crash, so to speak, and get everything at a extreme discount of whatever is left of the economy. So where do you think people should be putting their money? I mean, be as specific or vague as you want. You could get into, you put 10% here, 20% here, or be as vague as you want too. That's completely fine. Just general, where do you think people should put their money?
What I essentially like to tell people, you've raised a very valid point with, I think markets are overvalued and so on and so forth. As a trader, it would not surprise me for there to be more upside potential on the table, even in the US markets. And one thing to keep in mind, at one point in this huge craze of financial easing and all that, Japan has always been a poster boy for it. They've always been aggressive in their monetary policy. So aggressive that you had people like Kyle Bass come on television very frequently, make perfectly rational arguments and say, look, Japan is heading for disaster, short Japanese government bonds, short the yen. And they call that trade the Widowmaker, because so many people lost money on that trade that it's not even funny. So right off the bat, you have to accept that possibility as well, that the market can just remain ridiculously irrational for an extended period of time. So that's why I kind of try to get my bases covered. And for the launch of my book, I'm going to be on a total of approximately 100 interviews on YouTube, on podcasts, and so on. Interviews on crypto channels, interviews on gold channels, interviews on, all over the place. And one of my main missions kind of is to get people to understand that you don't have to pick a side. Like when it comes to each asset, I tell you, look, here is everything I know about the asset class in question. Here are the pros, here are the cons, here's what tends to work, here's what doesn't tend to work. And essentially, after going through the second part of my book, people are going to be able to internalize exactly what they want to invest in and why. So it's going to be kind of deeply ingrained in their subconscious that I, in my situation, want exposure to this asset for this reason, for that reason. I also want exposure to this asset for this reason and that reason. And by having this ingrained in your subconscious, it's kind of going to become second nature to you to be on a continuous shopping spree, because there's a reason why I'm here right now. It would have been far more comfortable for me to wait until there's another financial crisis, because when everyone's panicking, it's far easier to talk to people about financial preparedness. It's far easier for them to empathize with you. Except it doesn't work, because I would much rather be here now when things are calm and when nobody is panicking to tell people, look, it's time now to kind of put together this strategy based on the things I teach you in the book, because it takes time. I have positions, for example, here in my city in Romania, good income producing properties. I cannot just snap my fingers and great, you're now in a real estate position. You have to find those properties. You have to make sure you don't get scammed. You have to close the deal. You have to then work on them a little bit so as to get them back in shape and turn them into income generating properties. It's not simple. When it comes to other assets, it's sometimes more simple, but there's still work involved. There's still positioning involved. There's still timing involved. So kind of that's why you should be giving some meaningful thought to these things now. And by now I mean right after this discussion, because the risk to reward ratio is just so asymmetrically in your favor right now. If you just start doing something meaningful, that it's not even funny if you wait until everyone starts panicking and until it's all doom and gloom on financial news networks. Then you can have the smartest economist in the world by your side, and he won't be able to do that much for you. As I explain on the channel, as I explain in my book, it's not rocket science. These are genuinely things everyone can do. Putting together this plan, executing it, knowing exactly what the pros, the cons are, kind of having everything in your mind. It's so ridiculously easy. It's just that people aren't willing to put in any work. They would much rather listen to a guru who says, no, that's too hard. Just listen to me. I'll tell you exactly what you should prepare for. Just spend all your money on gold. Or it might be comfortable, but very rarely are the solutions which don't involve you venturing out of your comfort zone at least a little bit worth it. So you just have to put in the work.
Yeah, I couldn't agree more. You said a lot of really good things. Some things I didn't even think of as asset classes, domain names. I mean, I've heard of domain name flipping. But yeah, there's a lot of...
Speaking of domains, I'm the only economist that I know of, and I'm pretty sure I'm the only economist who studied something very recent, the short domain mania of 2015 to 2016, where kind of like with crypto, you had this huge influx of money from China because the Chinese wanted to move money out of the country, and certain domains that you could have bought for $8, the average registration fee in 2009 or 2010, they ended up selling for over $2,000 each towards the end of 2015. And once again, this is the fascinating stuff. This is why I'm so big on economic history, because just like you have people who borrowed money when it comes to the tulip mania, which peaked in 1636 to 1637, among the first people who borrowed money were craftsmen, weavers, who had these looms that were expensive. They used them as collateral and borrowed money to buy tulip bulbs. And the same way when it comes to the short domain mania, I had brokers from China talk to me. And I distinctly remember one of them telling me, man, this is so great. People are getting rich left and right. They're taking out high interest loans in China and buying these domains, and look at how much money they're making. And I asked him, I was like, yeah, sure, great. But what happens when prices go down? And
Mm,
I'm pretty sure he never even gave any thought to that possibility. And the same principle was valid when it comes to the tulip mania many hundreds of years ago. And it's just funny, history might not repeat itself, but it certainly does rhyme. And this is why I think there's just a ton of value in being a hands-on economist. I actually did make a bit of money during the mania in question, so fortunately I can speak from a position of experience and kind of provide some authentic input on that. But yeah, domain names are a legitimate asset class.
right.
Just like with crypto, however, you need to know what you're getting yourself into. You need to understand that in 2018, there are difficulties. The low-hanging fruit that people had at their disposal in the 90s or the early 2000s. Obviously, it's a more mature industry. It's less wild west-like than the crypto world. But this also means that the return potential is not always as amazing as in the crypto world. It's kind of like this continuous trade-off.
Yeah, I couldn't agree more. It's all on like kind of a risk reward scale. I remember like when one of my first, so to speak, businesses was flipping Instagram and Reddit accounts. And if you look back, I mean, some of these Instagram accounts that aren't even super big are getting a lot of money for sponsored content. You could consider those assets. Reddit is a little bit different. Those aren't as valuable as they once were, but people still buy them. Businesses buy them because they'll, use it for the karma to upvote other things they're putting out there, kind of use it as advertising to get some more traffic to their site. But so did you want to talk about anything else before we get into like a little bit more into crypto, and then maybe we could wrap it up, or it's up to you?
Oh, we can actually get into crypto because I do believe there's definitely a place for crypto in all of this.
So yeah, we covered a lot. Did you wanna tell people where they could find your book, where they could find your channel, give a final I guess piece on this, and we'll wrap this up, man.
Sure. Like I tell people that I do have this luxury of writing books and doing YouTube from a position of, let's say, financial comfort. Like I don't depend on this income to pay the bills. So to kind of put my money where my mouth is, you're going to be releasing this during my promo week. So from the 6th of August to the 12th of August. And during that week, the price of the book, and it's like, I joke with people that you can work out your biceps with it if you make a goal out of it. The price of this book is going to be 99 cents. And essentially, I'm giving it away and telling people, look, I'm giving it away, and you're just, 99 cents is a symbolic way of having some skin in the game, of having, some motivation to say, okay, I'm invested in this. I want to read this. I want to take this seriously. And two, also, thanks to my channel, I had this luxury of being able to contact sponsors to put together a contest. And through the contest, anyone can take part. If you have a Facebook account or a Twitter, you can just spread the word about my book, and I reward people for doing that. The first prize is huge for a book contest. It's 1 Bitcoin. The second prize is 1 Ether plus 1 Litecoin. Then I have 8 hardware wallets, $100 Amazon gift cards, domain and hosting packages, just a ton of prizes for pretty much everyone. So by the time this video goes out, you can just go to 1minuteeconomics.com to read the full rules in text form, or check out my channel, youtube.com/1 Minute Economics for the video with details and whatnot. I kind of do this for 2 reasons. Like, as an entrepreneur, I know that even when you're selling ideas, you're still selling something. So I never agree with people in the education space who say, oh, my audience is so spoiled, they binge watch Netflix all day instead of learning. That's not a good strategy. If you want to do education properly, you have to think outside the box. You need to get people's attention. You need to keep people's attention. So that's why I'm kind of so out there on so many interviews now, why I'm even having a contest and whatnot. If people don't find out you exist, then it's all in vain, because they're never going to be exposed to your ideas. And also, two, we've talked about some pretty gloomy stuff, but I do want to make it clear, especially through the contest, that my book launch is not a funeral. So, of course, these are serious things, and it's not a laughing matter. Families are going to be financially devastated. You're going to have friends and people who are close to you. You're going to see them lose their jobs and be depressed. It's not going to be a pretty sight, and there's really nothing you can do to stop it. What you can, however, do is position yourself so as to land on your feet. So with that stated, there is zero value in being depressed or going in panic mode or whatever. So essentially, I think a good closing message would be, look, be a positive person, be optimistic in life. I'm all for that. But when making plans, it's usually I found wise to err on the side of pessimism. So if people can just basically internalize that, if they buy the book, perfect. I hope they've put it to good use. If they subscribe to my channel, I am more than happy to have them. But even if their solution in no way includes me, I would consider it a victory if they would just do something. What that something is entirely up to them. But I'd consider it a huge victory if they even spend 1 minute, no pun intended, thinking about the things we've discussed today. And in and of itself, just that willingness to do anything at all that has to do with financial preparedness, especially at this stage in the game, I think you're going to be a pretty happy camper if you kind of have listened and internalized the things we've discussed today.
Yeah, man, I couldn't agree more. So I guess we're going to wrap this up. It's been great talking to you. Again, if you want to check him out, he's over on his YouTube channel. I'll put anything in the description, all the links if you want to grab his book. We'll be in touch, man. It's been great talking to you, and I will see you next time. Peace out.
Perfect. Have a great day, guys. Take care.